You know that feeling when you're trying to buy a home? You save up, you find the perfect place, you put in your best offer, and you still get beat. But what if your biggest competition isn't another family just like yours? What if it's a massive Wall Street firm? Well, today we're diving right into that. The battle for the American dream and what happens when your neighborhood becomes their next big investment.
I mean, for generations, this is how it's worked in America, right? Owning a home isn't just about having a roof over your head. It's the main way most families build wealth they can pass down to their kids. It's really the cornerstone of financial stability. But that whole picture is starting to change. There's a totally new kind of buyer in the market, one with seriously deep pockets, all the data in the world, and a completely different goal. So, what really happens when your dream home is in the sights of a multi-billion-dollar investment fund? Let's get into it.
So how did we even get here? Well, to understand that, we've got to rewind a bit, back to the last big housing crash.
The 2008 financial crisis. I mean, it was an absolute catastrophe for millions of homeowners. This chart really shows you the aftermath. Homeownership just plummeted to its lowest point in 30 years. But for a whole new kind of investor, this crisis, well, it was a gold rush. As millions of homes went into foreclosure, flooding the market at bargain bin prices, Wall Street saw a golden opportunity to scoop them up and turn them into a brand new asset class, single-family rental homes. So who exactly are we talking about here? Yeah, this is not your local mom-and-pop landlord who owns a couple of properties. We're talking about institutional investors. These are huge publicly traded companies, private equity giants, and real estate investment trusts, REITs. They've got access to just massive amounts of cash, and they use all this sophisticated tech to manage thousands of homes all across the country. And what's just wild is the sheer speed of this whole thing. Think about it. In 2011, a single company owning over 1,000 rental houses was basically unheard of. Just a few years later, by 2015, they owned hundreds of thousands. And their game has changed, too. It went from buying foreclosures on the courthouse steps to now, where they're competing head-to-head with families like yours for homes right on the open market. And this map, wow, it shows you exactly where they're hitting the hardest. This isn't happening everywhere equally. Just look at the Sun Belt. In a city like Atlanta, these investors own a staggering 25% of all the single-family rental homes, 1 in 4. In Jacksonville, it's 21%. They are literally reshaping entire housing markets. Okay, so that's the big picture, but what does this actually feel like on the ground when these investors move into your community? Well, the effects are huge, and not just for people trying to buy a house, but for renters and for the neighborhood as a whole. Just let this number sink in for a second. 1/3. In one single 3-month period, investors bought 1 out of every 3 single-family homes sold in the entire country. That is a massive chunk of the market, just taken off the table for regular families. So you can see how this puts the average buyer at a huge disadvantage, right? How is a typical family with a mortgage and a down payment supposed to compete with an all-cash offer that can close in a week? These firms use powerful algorithms to target the most affordable starter homes, the very houses that have always been that first rung on the ladder for young families, and they just snatch them up. And the impact doesn't stop once the house is sold. Research has found these things called social spillovers, real, measurable changes to a neighborhood's vibe. When corporate ownership goes up, the data shows some pretty concerning trends. Look at this, a 9% increase in drug-related crime. And this one is wild, a 36% drop in building and renovation permits. It suggests there's just less investment in the community, both financially and socially, even down to things like fewer people voting. And here's a really critical point. This isn't happening everywhere equally. Research shows that these investor purchases are often heavily concentrated in majority Black neighborhoods. This can actually drag down the property values of nearby homes, potentially wiping out the hard-earned equity that families have built up over years. Now, with all this pressure building up, people are starting to notice. And in Washington, policymakers are finally starting to fight back, with a sort of two-pronged attack to try and level the playing field for American families. So you've got 2 different strategies happening at the same time. On one hand, you have Congress aiming to hit these big investors right in the wallet by changing the tax code to make this whole business model less profitable. And on the other hand, you've got the White House using its executive power to tell federal agencies to just stop helping these firms buy up houses. Let's look at the bill in the Senate. It's called the Stop Predatory Investing Act, and it's pretty clever. If you own 50 or more rental houses, it would take away 2 huge tax breaks. deducting your mortgage interest and property depreciation. But, and this is the really smart part, it creates an exit incentive. You can get those tax breaks back, but only in the year you sell the house to an actual family or a qualified nonprofit. It's a clear signal. Sell the home back to the community.
Now, the White House is taking a more direct route. An executive order basically told federal agencies to stop insuring or guaranteeing home sales to large investors. So, no more government-backed loans for these big firms. It also pushes for first-look policies, which give families a head start on buying foreclosed properties. And it's telling the government's antitrust watchdogs to see if these huge buying sprees are legally crushing competition.
So you've got this huge tug of war, right? You've got investors, families, and now the government all pulling in different directions. The big question is, what does the future of homeownership in America even look like?
Now, to be fair, this isn't a completely one-sided story. Some economists argue there could be a silver lining, at least for renters. By turning so many houses into rentals, these companies do increase the supply of single-family homes you can rent. And the theory is that bigger supply could help slow down how fast rents go up. So it's this really tricky trade-off. You might get fewer homeowners, but maybe, just maybe, it provides some relief on rents. Which leaves us with the million-dollar question, doesn't it? Are these new policies from Washington going to be enough to save that traditional path to owning a home? Or are we watching a fundamental shift where the family home becomes just another stock to be traded on Wall Street? The battle for the block is on, and its outcome will define the American dream for decades to come.